Responsive Industries, a leading manufacturer of PVC products and synthetic leather. Well, this company is a fundamentally strong company, and I'm going to show you that in few minutes. But the most interesting part about this company is its shareholding pattern. We'll discuss all of these things in the fundamentals section. Now the question is, if this company is such a good company, is this the right time to make an entry in this stock? Well, spoiler alert, this might be the best time to make an entry in Responsive Industries. Why is that? Let's find out in this video. Hello everyone, and welcome back to another video of Financial Impulse. So this is Responsive Industries official website. I'm going to share this link in the description section. You can go through it and you will get to know about its business and its products. Okay, and now let's go to the screener site and check some fundamental numbers. Okay, so this is Responsive Industries. Now coming to the current market price of Responsive Industries, it is 299.45 with a market cap of almost 8,000 crores. The reserves it has is 1,000 crore and a debt of 218 crores. That's why the debt to equity ratio is 0.02, which is a very good number. Sales growth average in past 3 years has been 22.23. And the profit and earning per share growth has been on the lower side, 1.72, but you will get the proper justification of this in few minutes. Okay, so now coming to ROA and ROCE, so these are also on the lower side. Okay, interest coverage ratio is a good number, 7.08. Anything above 5 is a good number. Current ratio is excellent at 2.33. Operating profit margin is the highest in this industry. As you can see, no other company is having an operating profit margin above 20, but Responsive Industries has 21.04. Okay, promoter holding is 58.94%, so this is a very good number. Oilman Z score is 11.42. This is also a very good number, and it has a very small pledging of 1.27%, which is fine. Okay, because it is less than 10%. Now let's check the year on year profit and loss. So when we come to profit and loss statement and check the last 3 years growth, we see that the sales dropped slightly in 2022 from 1103 crores to 974 crores, but it is a small drop, not a significant drop. But again, in trailing 12 months it has increased to over 1000 crores. But you can see that despite the drop in sales, the operating profit however remains same at 110 crores. So the reason behind that is the increase in operating profit margin by 1%. And you can see, although here in the trailing 12 months the sales did not increase that much, okay, even less than, we can say, 60 to 70 crores only, but the operating profit almost doubled. The reason behind that is again the increase in operating profit margin from 11% to 21%. And you can see in the history of this company, it has never achieved an operating profit margin of more than 20 until the trailing 12 months. So that tells a lot about this company. Okay, and same we are getting to see in the earning per share as well, from 0.00 to 0.90, then 5.12. so this is clearly telling that the company is in a turnaround state, and definitely it is heading for a brighter future. Okay, at this point. Now comes the most interesting part, that is the shareholding pattern. So okay, so we will first check the change in shareholding pattern. So you can see in March 2021, okay, the promoters were holding 49.58%, but in September 2022 you can see the increase in stake by the promoters from 49.58 to 58.94%. so this is almost 9% increase in stake by the promoter, so that's a lot. Sorry. Now coming to the FIs holding, you can see the massive change in stake by the FIs from 5.36% to 35.69%, so more than 30% increase in stake by the FIs. So whenever we see that the FIs are increasing the stake by huge margin, so normally that happens when the promoters are reducing their stake significantly, or they are completely selling their stake and making it zero. Only in that case we get to see that the FIs are increasing their stake by 15, 20, 30%. But that is not the case here. The promoters have increased, the FIs have also increased at the same time, in fact in the same quarter, and the DIs have maintained their stake, okay, from 3.56 to 3.56 to 3.56. okay, now coming to the recent quarter, we can see the promoters are still holding the same stake, 58.94, and the FIs are also holding almost similar stake, 35.12, slight drop but not significant. Okay, and DIs have also maintained from 3.56 to 3.57 almost. Okay, they have slightly increased 0.01%, which is negligible. So the overall shareholding pattern is clearly giving us the idea that this company is actually heading for a better future. That's why the smart money have increased their stake massively, the FIs, and also the promoters have done the same. So definitely this is something which we cannot ignore at all as wise investor. So the overall fundamentals of the responsive industry is clearly telling that it is fundamentally strong, a low debt company, and the shareholding pattern is extremely promising. Okay, so that's why definitely it should be considered for investment. Now we are going to check the price action and decide if this is the right time to make an entry in the stock or not. So before going to the price action, I would request all of you to please hit the like button and subscribe to Financial Impulse if you have not done already. Now the price action. So this is responsive industries in weekly time frame. So you can see after hitting this level of around 360, okay, the high of 360, it started consolidating. Okay, and the consolidation has been going on for a while, but at the present time the price action, the price where it is falling is actually very important. Why is that? You will get to know when I enable the 40 weeks moving average. Okay, so you can see it is directly touching the the 40 weeks moving average, and we are going to get a better look when we go to the daily time frame. So this is daily time frame, and we know that the 40 weeks moving average is actually the 200 days moving average. So here you go. When I enable the 200 days moving average, you can see how nicely the stock is actually resting on the 200 days moving average. Okay, the price, you can see it has touched the 200 days moving average and now starting to show strength. And if you see this region, let me just scroll back a little bit. So you can see here it was showing, here it started showing weakness, red candles back to back, here back to back red candles for a very long time. Okay, then suddenly a big green candle attempting to give a breakout, but it failed. Again red candles, then one more attempt to give a breakout, again failed, and it was pushed down. And here we get to see finally 4 back to back green candles, but again it was pushed down, and again it tried to give a breakout here, again it was pushed down, and now it has touched the 200 days moving average, which is the ideal buy point for most investors. But as smart investors, we are not going to jump in directly as soon as it touches 200 days moving average. We need a confirmation that the stock is about to start a new rally from here. Okay, so how we are going to get the confirmations? You see, I have drawn one trend line here. So what we are going to do is we are going to wait for a breakout to occur. Okay, a breakout to occur above this level. Okay, and definitely this stock is going to retest either this level, okay, or this level after the breakout. If it gives a small breakout here, then it could come down and test this level, okay, and then bounce from here. Or if it directly gives a big breakout here, it could come down and test this level and go from here. And that is where we are going to mark our entry. So you can consider your entry price will be somewhere around these two levels. So this is around 330 to 300, you can say. Okay, 330 to 300 will be your entry price, but only after confirmation of the breakout with strong volume. Okay, and by that time you will see that the 50 days moving average would also have started giving it support. Okay, it is currently passing through the candlesticks. You will start to see that it is acting as a support, and then the breakout occurs, and that is where we will mark our entry. Okay, and this will be the perfect approach, okay, for entering in responsive industries. Okay, in this way you are not going to get stuck in a share for a longer time when it is going in the sideways transition. You are only making an entry when it has given a confirmed breakout, and you will start getting profit as soon as you make an entry. So one more reason why this level that I have drawn here, 270 level at the here, this blue line is important, is it falls at a very crucial fib level. You see, when I draw the fib retracement, okay, you can see that this line is aligning nicely with the 0.618 level. See, if I delete this blue line, you will get to see. Okay, so what does this tell? So this tells us that this big rally, initial big rally which it gave, is actually very strong, and now the consolidation is going on. Okay, and once the consolidation phase is over and it gives a breakout here, it is going to start a new rally. Now considering that you are making an entry at the price somewhere around 330 to 300, what will be your profit taking target? So like always, the first profit taking target will be the 1.414 level, that is the 480 level almost. Okay, the second one will be 530 and the third one will be 630. Okay, now let's measure. If you are making an entry at let's say this is 313, okay, 310 let's say. Okay, if you are making an entry here, then how much return you are going to get if you hit the minimum target of 1.414 level, that is 480. So you are getting 53.82%. okay, if you exit at 530, which is 1.618 level, you are getting 71% return, and if you are hitting 630, you are getting 103% return. So that is almost double. So these are the three targets. Let me just write it down once again for you. 480, okay, then 530, then 630. These are the three profit taking targets. So now the question is, how long you have to hold this stock in order to hit this target? So it will be a minimum of 6 months and a maximum of 5 years. Okay, it can happen earlier also, but I prefer to give an conservative estimate so that you do not expect too much from a stock. It is always a better idea to keep your expectations low and get better results in a shorter amount of time, instead of thinking that this stock is going to give a rapid rally but it takes longer time. So that is not a good idea. So that's why I am giving you the conservative estimates of minimum 6 months and maximum 5 years, okay, in which these targets could be hit. So that is all about responsive industries, and I hope this video was helpful to you. Please hit the like button and subscribe to Financial Impulse if you have not done already. And if you are already a subscriber, consider joining the Financial Impulse community. Thank you for watching. I'll meet you in the next one.